Let's move on to Blue Label, which has a core business in the virtual distribution of secure electronic tokens of value and transactional services across its global footprint of touchpoints. Can you explain?
What that means in normal English is their touchpoints are like when you go to the petrol station and you buy a token, which is like a printout, 100 rands worth of MTN airtime. You get the code and you punch that into the phone. That's the network of supply points that this company is built up with. They buy that airtime from the networks in bulk and then resell it to you. High revenue, low margin business, but a plucky bunch of operators, that's for sure.
And we've got another trend here that takes from our conversation yesterday on the banking environment. We had the co-CEO environment with Standard Bank, with Sim Shabalala and Ben Kruger. And now we've got co-CEOs, Brett and Mark Levy. Just an interesting observation. It's not a very dominant trend.
The two of them always travel together. Market capitalization here, 5.3 billion. So not a tiny business. Price earnings ratio 10.88. Dividend yield 3.38. So they've hammered along. I mean, they've listed in the last 5 years or so, but they've, done fine.
Hammered along? Does that sound like the description you would use to describe them?
I think one of the problems with this Blue Label business is a lot of the market struggles to understand exactly what they do, because most of the cash comes from selling, as Paul said, airtime. And more and more they're moving into electricity now. And the best way to think about this business is that imagine you've got a railway line, which they have built, which is all of these points of presence all over the country where people buy airtime. And now it's just pushing more and more product through your same existing asset base. So you should get quite nice leverage there. Also remember that they have quite long-term contracts with the mobile operators for getting or for the margins they will earn on distribution. So relatively stable business on the cash cow side of it, with some quite interesting upside from technology.
Hot or not?
Hot.
Hot or not?
Look, they're building a business in Mexico, which is quite exciting, but sucking up cash currently. There are two risks. Firstly, they've got very tricky relations with the networks. Currently, they're best friends because they want to sell airtime, the networks, but there's always a sense that maybe there's a monopsony there where they're at risk if their network partners decide to do something. The other thing is understand there's shifting technology. So pinless top-ups, which is when people buy airtime without a pin, via the web or something, is also a potential. And they are in that game, but there are others that are in that game too. So there is technological risk here.
Hot or not?
I'm going to go with not hot, although I have flopped between hot and not on these guys over the years. I'm currently feeling it's a not.
Not hot.